I'm here with Ivan Naranjo, who's our portfolio manager in our fixed income group for Homestead Advisors. Ivan, it goes without saying the market has had some unbelievable volatility the last few days, specifically once we had the tariffs announced and how that's been perceived in the markets and around the world. So from a fixed income perspective, what do you perceive to be the major issues around the tariffs? And then and I'd like to ask you about the Fed and interest rates after that.
Well, Mark, thank you. I mean, definitely it has added an incredible amount of risk to the global markets, as we have seen in the prior sessions with massive volatility. But more specifically to the fixed income markets, the front end has been repricing very strongly in the last couple of sessions, which really means the yield curve is getting steeper. And in turn, that means that the Federal Reserve is looking to potentially cut rates sooner than they anticipated.
So at the beginning of the year, the market had priced in 2 to 3 rate cuts this year. Is that still what we're seeing in the crystal ball, so to speak?
Right. So, it's definitely a dynamic market, the futures repricing, but currently we're pricing around 4 for 2025, 4 cuts for 2025, and potentially 2 of those happening in June as a way to dampen the shock that they're experiencing now. The Fed is probably not at the best position that they can be, given that they really never managed to control inflation the way they wanted to. And now they're having to address this issue. So definitely very interesting to watch what's going to happen, come June.
Well, you mentioned inflation because, speculation that these tariffs may cause inflation. So how can the Fed put in 4 rate cuts with a 50 basis point cut in June if inflation can actually go up? Is that it doesn't make sense.
Exactly. So, the Fed did acknowledge that, the tariffs would give, inflation a push higher and simultaneously slower growth. So that is the risk of stagflation. Being mindful of that during that kind of scenario, traditional monetary policy tools aren't as efficient. So they are definitely in a tough spot, trying to go against the logic, really.
So last question really is, investors are anxious about where this may end up. As we contemplate today what this all means, what's kind of from a fixed income perspective, what should investors think about?
Volatility is going to be the name of the game. We have seen this, in prior years, and the best formula to deal with volatility is to stay the course, to stay calm, and to stick to your convictions. I think that, for active managers, we're looking for better opportunities with high risk reward, and definitely it's an environment of opportunities, and we'll be looking for them.
Great. Thanks, Ivan.
Thank you.
Appreciate it. Now I'm here with Jim Polk, head of equities with Homestead Advisors. Jim, we just had Ivan in talking about the fixed income markets, and we were just here 2 weeks ago talking about uncertainty in the market and the threat of tariffs and what that might do. Well, the tariffs were put in place. Markets have been off 10%. And wanted to bring you back in to kind of ask: has anything changed with the degree of tariffs, with the amount of the tariffs, and really what it's done to the equity markets?
Yeah, well, I think the uncertainty before the tariffs were announced was kind of roiling the markets. Then we got the tariffs. The tariffs were worse than expected or higher than expected. And I think the market's reaction is basically to say, we don't like it. Okay. And I think that's where we are now.
So there's we talked about potential for a recession, and now you've got a lot of individuals on Wall Street and even in the Senate and Congress that hadn't talked about this before are now starting to talk about recession and perhaps, a pullback on these tariffs. Do we think that a recession might be coming if the degree and level of tariffs remain in place?
Of course. I mean, I think that you can't rule that out. And we've seen a lot of estimates now going up, putting higher odds on a recession if the tariffs go through as stated. TBD. I mean, we will have to see what happens, whether or not the administration will pull back on the tariffs. I think the first quarter was fine economically. We'll find out more over the next couple of weeks as companies report. But if the tariffs go in as they are currently outlined, it would be certainly detrimental to the economy.
So, tariffs affect different industries than others. Are there any sectors that are more vulnerable to these tariffs? I mean, auto industry comes to mind.
Autos come to mind. Anything that's sort of manufacturing outside the U.S. and importing in. So it really would vary industry by industry.
Okay. Last question. We've got a lot of anxious investors. There are a lot of individuals, corporations, pensioners, etc. From an equity perspective, if you were to say one thing, what would that be to investors?
I would say don't panic. Like, this is not the time to panic. I think we're long-term investors. We're looking for opportunities here, things that maybe the baby with the bathwater, things that have been thrown out that are really good companies. But I would say no one ever makes money panicking. This is really the time to stay the course.
Well, I lied. I do have one more question, and that is, is there anything that surprised you? You've got years of experience, and we've been through multiple cycles. I'll throw myself on that same years of experience. Is there anything different today than perhaps what you've witnessed in the past?
I think people would point to this being self-induced, that this was really, not a macro event that happened. It wasn't like COVID or the financial crisis, that this was really done to ourselves. And therefore, I think the market reacts to any kind of change to that tone would react positively. Anything that sort of waters it down, I think, would be viewed positively because it is self-inflicted. I think that's really a big difference.
Well, stay tuned, and investors, we appreciate your support, and we'll have more if things change. Thank you.